So let's talk more about VinFast and a possible investment case. Are you brave enough to step in there? Brian Dobson is joining us now, Chardan Managing Director. Brian, thank you so much for being here. You heard some of the elements that Pross just laid out. And setting aside sort of the technical factors in the small float for just a minute, to talk about the cars themselves. As he mentioned, they've not gotten great reviews. Is this product sort of ready for prime time here? Is there a demand for it?
Yeah, the product received a disappointing slate of reviews upon initial introduction to the United States automotive press. We've spoken with management at great length since then, and they've assured us that they've made appropriate corrections to the vehicles, which should be completed by the end of this month. I think that the next, perhaps, catalyst for the stock is the reintroduction of the vehicle after the suspension and steering have been retuned to have it re-reviewed by those same journalists. I myself am excited to test drive the new vehicle early next month.
Yeah, Brian, I was going to ask you, have you had a chance to get behind the wheel of one of these?
Not yet, but I've read the reviews at depth, and there are some extremely cautionary tones that kind of run throughout all of them. Now, I brought those up to management, and it was refreshing because they didn't say, hey, these guys don't understand the car, or we got a bad story, or it was a bum rap. Instead, they said, yes, we took those to heart. We think 80% of them are software related, 20% of them are hardware related, and they should be fixed by the end of October. Certainly the proof is in the pudding, and I look forward to putting that car through its paces in a few weeks.
And Brian, when you look at that car, what do you think some of the competitive advantages are? Is it price? Are there certain features that make them stand out?
Yeah, so I think what VinFast is trying to do is a go-to-market strategy that's been successful for Japanese and Korean OEMs as they enter the US market. And that is to provide a little bit more at a competitive price point. Certainly we've seen several price breaks within the EV sector. VinFast has not adjusted its price point. That might be something management is considering. But from its statements, it looks to bring something to market that will be competitively priced and offer a variety of features that are not available at comparable price points.
So there's the sort of fundamental case around the cars. Let's talk a little bit now about the sort of technical factors here, that there just aren't a lot of shares out there, and that's one of the things that is really whipsawed the publicly traded stock. Are you hearing anything from the company that's going to change? Are you satisfied with that kind of structure?
We've spoken with management at length regarding the extraordinarily limited float. It is our chief concern, and it's what's keeping, I think, institutions away from the shares, because there's simply not enough liquidity to get involved in a meaningful way. I think management's aware of this. I think that over time they'll work on a way to have additional non-diluted equity offerings in order to bolster that float. It will simply take time.
And Brian, taking a step back and you look at the overall EV market, how confident are you in demand for EVs, Brian? Or is there a risk that we may be overstating it? I ask that because we've had car dealers come on Yahoo Finance, Brian, and they'll tell us what still sells are the gas-powered trucks and SUVs, not the EVs. I look at Tesla, and I've always wondered if demand is so strong, why Elon Musk has to cut prices. You don't see Tim Cook cutting prices of his iPhones, right? Or do you think I'm misreading these cues?
I think you're reading the EV market correctly for the short term. And what I believe Tesla is doing is taking significant price action in order to protect its incredible market share of EVs, which is over 60%. However, if you're looking at the transition to electric vehicles, or rather the broader electrification of transportation, I think we're still at the very early stages there. And this change in consumer preference and technology is very reminiscent of the United States auto market in the 1970s, when the oil crisis brought about a new focus on fuel efficiency that allowed new market entrants to reset market share. And I think that's what's going to happen here with electric vehicles, and certainly opens up the United States and other established markets to new players.
I want to switch gears for just a moment and ask you about another company that you cover because it was very much in the news yesterday, talking about Li-Cycle, if I'm saying it right, or Li-Cycle, Li-Cycle, which said it was pausing construction on its plant in Rochester to build batteries. This is a company, a plant that had been supported by the Biden administration. What do you make of not just that, but the push for this U.S.-based industry in general?
Well, I think the onshoring of battery manufacturing and recycling is important within the broader context of the electrification of transportation. As far as Li-Cycle goes, it has put a pause on the construction of its Rochester refining hub and is undergoing strategic review. But yesterday's sell-off, 46%, would imply that there's something meaningfully flawed with the way that the company plans on recycling batteries. I do not believe that that's the case. I think that they'll come out of this strategic review. They'll likely have a longer timetable for the construction of that facility, and it will be at a greater expense. But I think that they will be able to recycle batteries in the way that they've projected to the market. And I also think that it will continue to enjoy support in Washington, and that its DOE loan is likely to come to